Hey guys, New Year stock episode. Happy New Year to everyone. So I'm down 3,000 on last week, but I thought I'd do a bit of sort of reflection on the portfolio as a whole, sort of see what's done well and what's done badly. So obviously the crypto hasn't done all that well since I bought it in here. Argo and Hive sort of down for the week, but obviously not done too well since I invested in those. But you know, if you've seen my Argo blockchain video recently, you know my thoughts on them. Hopeful for this year. But yeah, the gold and silver not really done too well last year, except Freeport McMoran, but they're sort of into copper as well, so I think the copper side has probably been what's helping them up. They do a bit of gold and silver, but yeah, the other sort of main gold and silver ones haven't really done that well. I am thinking sort of I've been getting out of gold and silver a little bit. I think if the crypto does well, maybe putting in a bit more than I was expecting back into gold and silver, whether it be sort of these miners or might buy some more physical. But yeah, we'll see. The sort of lower cap, sort of Fortuna and my royalty ones and that sort of thing getting hit harder than a lot of others because they're fairly small cap. And then you sort of wheat and precious metals, the really big royalty companies sort of doing fairly flat basically. And the silver, sort of First Majestic Silver and Pan American, sort of both reasonably down, but yeah, I think they're in a reasonable spot. I think they could do well for the year. So yeah, if we get some crypto money, I think probably be allocating some back into that as well as sort of ordinary stocks. So the ISA is down 1,500 quid for the week and really not done too well sort of in the past 6 months really. So yeah, that was when April I sort of put the 20,000 in, and then it's just sort of trickled down since then. Not made two good decisions since then. The ArcPi sort of carrying on downwards. Not too bothered about that. I've sort of mentioned before. But yeah, so a lot of these will just sort of be small amounts that are down 30, 40, 50%, but they're in the ArcPi, so I won't bother about those. REITs have done surprisingly well for the year. A lot of them sort of outperforming the S&P. American Tower, 30% up for the year, plus a dividend, so that's pretty good. I didn't quite buy it at the year low, obviously, but I've made a decent return on that. And then sort of the things like Digital Realty have done pretty much the same, 27%, again, plus a dividend, so outperforming the S&P, which I'm pretty happy with. Sort of been thinking these sort of more specialty REITs. I'm not really into sort of housing REITs all that much, or sort of the mall REITs, Simon Property Group and that sort of thing. Just they've done okay, I think, but just not really my sort of thing. Quite like the sort of data centres and cell towers, industrial, all that sort of thing, and a bit of realty income. But yeah, so sentiment, basically same as the gold miners, not done too well, but I think it looks a decent buy. Probably would add to this, maybe if it's here, with some of the Argo blockchain money later in the year, hopefully. Bitcoin ETP, obviously, for the year has done. I've been in that more than a year now, so that's well up as opposed to the Argo blockchain. What else we got? First Majestic, I'm up still 50%, but it's had a fairly bad year. That's only because I bought it sort of at the lows last March. So yeah, that's not done too well, but would like to add. Realty not done quite as well as sort of the industrial side. As I say, they're sort of more in your sort of everyday shops and that sort of thing, Walgreens and 7-Eleven and that sort of thing in the US. Moving into Europe though, so yeah, I sort of don't mind them, sort of more steady REIT. But Stag has been the big performer for the year, outperforming. I think it has passed the Nasdaq now as well, plus a monthly dividend. So yeah, I bought this back in March time, I think. It's done sort of even better earlier on. I think I did have this before March, but yeah, so Stag doing really well, sort of the equivalent of Tritax Big Box in the UK. Sylvania, again, similar to First Majestic Silver, really. I sort of bought this in the lows, or sort of a lower point last year, so I'm still up on it, but it's had kind of 2% up on the year, plus a small dividend. Did go to £1.41, 45. So yeah, it's been knocked down by the sort of chip shortage in the automotive sector. So hopefully if that can pick up. Obviously got the headwind of EVs coming in, not needing any platinum group metals at all. So got to hope that the sort of increased regulations will offset that, and we'll need more. So hoping for an uptick in rhodium. But yeah, very happy with them. 90p a share. So I wouldn't add to them at the moment, but yeah, pretty happy with them. Tritax, pretty much the same as Stag Industrial, to be honest. Done really well. I didn't get into them at quite as good a point, so I'm up 37%, but pretty good. Eurobox hasn't done quite as well. They're quite small still, so maybe sort of finding their feet, but yeah, like the sort of diversification, similar sort of thing in Europe, so happy to hold them. But yeah, 20% for the year. It's outperformed the may have outperformed the FTSE 100. I'd have to check that actually. I think FTSE's at an all-time high again now, so and Vici I've sort of only not long been in, so that's up 18% for the year, but I'm only pretty much flat. But I think this one's a long-term hold. So overall, the REITs have done really well. As I say, a few of them sort of outperforming the S&P, so you can't whinge at that. And bit of trouble on the invest account. So I see Trading212 have filed their accounts for 2020 as well. So that was good. A lot of sort of speculation on they were having trouble not being able to file their accounts. It does take them a long while, sort of New Year's Eve pretty much, they're filing 2020's accounts, but that's the way these sort of UK smaller companies work. So yeah, the year sort of obviously earlier in the year I was putting crypto money in, so the percentage return is sort of all over the place, not really a true reflection. And then sort of recently I've taken some money out to move Alibaba and Baidu. I've actually been withdrawing a little bit of dividends as well, sort of about £500 or so, just to pay a few bills recently, tax, accountants' bills and that sort of thing. So yeah, I wouldn't take the return as sort of gospel. But in here, the sort of really the theme is American sort of your standard dividend companies not doing all that well. Your sort of 3Ms and your sort of staple American dividend companies. It's the weirder ones that have really done well for me. Things like Airtel Africa sort of had the reasonable move in the last few months. I haven't been in it all year, so I didn't get 70-odd%, but yeah, sort of 41% rise, done really well. The sort of tech side, I've not really been in too long. Alphabet obviously done really well for the year, but only just got into them. I've seen a rise in Apple, to be fair. Archer Daniels, though, outperforming the S&P for the year. Done pretty well. I didn't get all that rise, but yeah, because I was in them. So overall I haven't probably outperformed the S&P with them, but certainly for this year they've done really well. Sort of said with staple sort of food stocks, this is what I was interested in. Sort of still anticipating a bit of downturn in the overall market. Asos, sort of gone through my thoughts on this. Pretty happy with them as a long-term hold, but terrible for the year. £57, £58 at one point. They've been higher in the past as well. So, yeah, that one's taken a knock. Also we got Broadcom is one of my... So, I mean, that looks ridiculous when you look at that. So I've held that quite a while. Need to probably do some more analysis on this again just to see where we are now. Sort of run away a little bit, and I've been focusing on the crypto and other things. 665. So that's done really well. eBay even sort of outperforming the S&P for the year, but yeah, I've done okay on that. Hymax, one of my newer ones, 28% for the week. I mean, I always said this was good value. Not seeing the if there's sort of any particular news to pump this one up. I do sort of think of it as a sort of a secret, almost metaverse stock. It's going to have their display chips and everything in the headsets for sort of VR going forward, metaverse type technology. They're also got sort of display chips in like the electric vehicles. Seems like every electric vehicle seems to have a great big tablet sort of nailed to the dashboard. So yeah, they're gonna. I think they've been signing deals with automotive companies. So yeah, it could be a sort of sleeper metaverse and electric vehicle sort of modern vehicle stock as well. So at sort of 2.5 billion. Nice one to hold for a reasonable time, even if it is up. I think it's still fairly good value. I will reassess, but I like them at $12. Things like Intel and International Paper and stuff really underperformed. The ETFs have pretty much all underperformed. Global Clean Energy sort of taken a whack earlier in the year, but that one was really up last year. Johnson & Johnson, things like that, Legal & General, just plodding along, but that's what they do. Quite happy with plodding along, sort of once the portfolio's at a larger level. Lennar, doing really well for the year, sort of housing market looking pretty good since last year, a bit of a downturn. But yeah, did sort of say this one was a reasonable buy. So happy with that. Lockheed, 0.15% up. It's quite funny. Held that for a long while now, and that's basically entirely flat, excluding dividend, of course. Micron has come up, so that's been a bit of a roller coaster. Was hoping to sort of add some there in the 60s if it was going to stay where it was, but ship sailed on that one, I think. Porsche, not too bad, very good for the year, 47%, and I am up 39%, so caught a lot of that. I think you know my thoughts on them. Nintendo, yeah, as well, 20% down on the year. That's not been good. I think everyone got a little bit carried away with last year's sort of everyone in the world bought a Switch because of lockdown, and this year looks bad in comparison, but very, very happy with them going forward. As I say, one of my sort of highest conviction companies, if not the stock, probably them and Disney. even though I still haven't bought any Disney yet. Process, again, Chinese crackdown, gone over this sort of a load of times, so 17% down on the year, but very happy with them. Tencent, pretty good, plus I like their emerging market stuff, buying a lot of companies in India, and yeah, nice one to hold from here, even though it's done appallingly. Well, 16%, it's not appalling. 20% on Raytheon, so that's okay, but a little bit underperforming the S&P. Rio, pretty terrible, but happy with that going forward. Shell, interestingly, sort of with oil, people thinking oil as a terrible investment, but that's outperformed the S&P for the year, and I bought that sort of in the somewhat lower point last year, so 42% up. That's been a real positive. Pretty happy with them going forward. Samsung, I didn't hold this all that long, but yeah, I'm down on them, but do want to buy more. It's in an article saying they might be buying Biogen, even though they've denied it, so very odd move. Yeah, smaller positions there, not done all that much. Sony, sort of, yeah, pretty much equal in the S&P. Quite like them. Stellantis has done basically nothing for the year, but happy with them. TSMC, pretty similar, I think, 10% up, but you can see it's been going nowhere for most of the year. Tesla, I haven't really been in that long, but obviously people know the roller coaster with that. Turtle Beach has been fairly poor. Tyson Foods marches on and on. Almost looks like sort of stag with the 45-degree up. That's done really well, outperformed the S&P, and still looks reasonable value. Vale is pretty much similar to Rio Tinto. You know my thoughts on that. Video games ETF has done terribly. Maybe I should be picking the individual companies a little bit more, although this has outperformed Nintendo for the year. So we'll see. Beatrice is sort of one of my smaller positions, not done too well, but yeah, I sort of bought that after the big drop, so I'm actually in the positive on that. And yeah, Volkswagen, same as Porsche, really. So yeah, that's sort of a review. It seems, as I say, you know, if I just went with my sort of highest conviction positions, then I could be worse off than I am now. I probably would have piled into Nintendo and Disney and that sort of thing, and would have been quite a bit down for the year. So it's the ones that you sort of buy on the off chance and forget about that actually end up doing well. So we'll see where we go for the year. Can't see me sort of looking at too many different investments. I think if the crypto money comes this year, should be largely just topping up most of these positions. So yeah, leave your thoughts in the comments below. A little bit of a garbled video, but yeah, like and subscribe, and see you soon. Wishes well for the new year.